All right, this is El Jermaine Russell, March 25th, Sunday night before the market opens. It looked like we had a good, good bad day on the market on Friday. I know I still haven't figured out how I can get multiple. How can I reduce this whole the heat map into one actual square? But it comes out like this. Either way, it's just out there like 6 or 7 times, whatever. But essentially, the market has been red for the past couple of days. Just continuing to drop. And as I'm looking at the market, and I know that I had some notes to actually kind of look over the weekend. And when I did, I stumbled upon a couple of things. The very first thing that I stumbled upon was that, as a reminder, that 3 out of 4 stocks follow the market. So this is something that going forward, knowing how the market is moving, this is something that should definitely be something that I should keep in mind as I continue to trade, as I continue to look to advance in my career as a profitable trader. But I do want to go over some of my trades that I did during the week. I didn't trade until Wednesday, and then when I traded on Wednesday until Friday, I actually made 6 different trades. This is more than what I am normally comfortable with doing. I don't tend to like to do 6 trades in a week. That's just way too much. That's just way too much. So it just tells me that I'm still kind of chasing, and I'm still kind of I'm not waiting or anticipating for the better plays. I know that some did have some good moves, like WEYK, this technology company, and most of the technology was going down this week. Anyway, actually, let's look at the index for technology, and it was going down earlier in the week. It was going down, and as we can see, it's starting now to bounce off the 100-day moving average, and it might break down further from that. And this is the index of the technology sector, and it's right now it's testing support at the 4100 level, so it could actually continue to go down even further, and probably not be a good idea to trade tech stocks this upcoming week. If I look at the Nasdaq, I look at the triple Qs, we're seeing that even that is starting to downtrend as well. Well, I said, whoops. Let's, yeah, SPY. Sorry. What is it? SPY. No, it's a spider. Like I am not. I think I just had a brain fart and I can't remember what the S&P is. SPX. There we go. So SPX, which is the S&P, it too has been pulling back and is testing the support as well at the 2500 level. Now, I remember when this was starting to happen, and this was definitely near that October, November time when this was going to break, and it did, and it continued to break resistance, and after it broke resistance, it just continued to go higher. Now, will it make it up to 3,000 again? Will it retest this 2,800 level? I think it's possible, but with all the news that might be coming out tonight, and I do want to check Bloomberg to see what happens in Korea or in the eastern markets. I'm kind of want to see what happens with everything that's going on over there. Maybe there might be some more pullback, especially with a lot of things that are happening in China when it comes to their the technology and energy. particularly dealing with cryptos, because I know a lot of crypto regulations have been put up with further regulations and further restrictions in China. So I know that that will affect a lot of technology companies and energy sector, since, as I recently found out, that energy is affected by energy in each country is affected by in the crypto world. I didn't realize that there are so many when it comes to the companies themselves, that there are so many companies that actually use that they use the energy that is necessary to help drive the technology forward. So since that is something that is brand new to me, I will be looking at how energy and technology run together going into going into future days from now. But with that all being said, I do want to get into some of these trades. I was in on KEYW. I don't think I held this overnight on Wednesday into Thursday. And Wednesday into Thursday, I held this. I bought this at 8:15, thinking that it would go further. And you can see I draw some resistance lines here. I bought it at 8:15, and clearly it did not go any higher. I thought it was going to go higher on this day. It did not. It failed back, and I sold for a small loss at $7.97. When I did see it go up to 840, I did want to sell, and I didn't. When I saw that 836, I was hoping that it would continue to go. I was actually anticipating it go to 850, but I didn't take what the market gave me. Therefore, I took the loss and reduced my just took away my position. And so I just reduced my loss. So this was something that like I said, I really thought that it was going to start having some type of movement on that Wednesday on the 21st. I bought you Wednesday, right? So I bought it. I know it was going up, and because it was going up, I thought it was going to continue to go up. See, it tested 834, and I thought it was going to retest 840, and it didn't. It just played this resistance game in the 834, 835 area before coming right back down. So that Thursday, I ended up selling it right down here somewhere. Because it just was going to continue to fall, and that it did. It did continue to fall. If I would have kept to my standard and said if it gets to 810 to trade or to sell it, then I probably would have been better off with a smaller loss. And particularly when you see a trade like this, when you know that it is starting to test previous lows, that's when you really should start selling. And I did not sell. I saw the support at 812, and I was just holding and hoping, and it did nothing. But that was the one thing about this trade, is that it did have weird moments in this trade, like where it just came and broke down in pre-market trading, or right when the market opened. It just broke down and then just eventually came right back up. So it was kind of weird when it did any type of trade similar to this. So I'm glad that I got out of it with a minor loss, but I was able to regain those gains later with another trade. So I have my resistance line, I have my support lines drawn. I did not want to trade it down here, but idealistically, I probably should have bought down in the 780s, because I think the 780s is where there was some real support. Oh, 750 actually. 750 was where the real support was. So I could have waited. I could have had more patience in actually buying. So what I am now starting to see is that when it comes to buying and selling, that I know where to buy at, but my exits are not as efficient as they could be, especially when they consolidate like this. On the hour chart, you see it consolidating. See it consolidating right around this resistance area, and when it consolidates like this is when it could go up or it could go down. But 9 times out of 10, I start to see that it can go down, especially if you start seeing red candles forming. The green candles get thinner, the red candles get stronger, and once it starts going in between red and green, that's when it could definitely go down. But tomorrow, if technology continues to work the way that or goes against the way it's been working, this could actually continue to go up. I'm starting to see that it's consolidating near support and starting to go up. And this was on Friday. So who knows? It had a lot of dropping going on that Thursday going into Friday. So, let's see how much recovery that will happen because of that. So let's go to the next trade that I had, which wasn't KEYW I did, but ECYT, which I ended up buying because it had its first green day, and I bought it the same day. So that was another thing. I know I bought this the same day. I bought both stocks on the same day. That's not always good. You don't necessarily have to buy a stock just because it's available or anything like that, or because you're out of position, you want to get back in. But I bought it on the first green day, and I said, you know what? If I'm going to buy a stock, buying it on a day like this is probably best. But if I look at what happened the days before, let's say if I bought it here, this was a red candle, right? It seemed like every green candle there's a red candle that follows. So I didn't really watch that, but what I was watching or remembering is the history of the chart, of how strong the momentum was for it to continually uptrend. But I had reservations when I bought this in the beginning anyway, because of these two indicators, the MACD and the RSI, particularly the RSI, because the relative strength of it was showing that it was overbought. And because it was overbought, I particularly could have just left it alone and wait for it to come back down. I do see this coming back down. I don't see that it would stay as high as it is right now because it is overextended. We look at the long-term chart. It even had a bad sushi day, which is something that I can't say that I particularly like to follow. But I can see this coming down to the 912s, finding support there. So what I'm going to do right now is create an alert and the let's say 920. Let's say 920. So if it does come back down to 920, that at least is holding support and could possibly go somewhere later on in the future. But I bought this at $11.05, $11.05. It was doing, particularly what I thought it would do. Wednesday. Here goes Wednesday. So I bought it. Yeah, somewhere around here. I remember it being before the lunch hour, and I was debating if I should buy it because I initially wanted to buy this at a much lower price, and I think I put down 1080. Now I watched it from 1050, and at 1065 okay. Yeah, 1065 I kind of just looked away and didn't think it was going to go any higher, but it definitely did. Um, there was a lot of selling at $11. It was at 11. I wanted to wait to buy at 1085 because that's what it was saying on the 100-day moving average that hey, it might bounce off 1185. I, you know, I wish I listened. I wish I listened because at 1185, even at 1085 or even at 1050, at least the next day it would have got back up to 1120 or 1125. So I could have potentially gained if I held this overnight, but as we saw, it kind of just downtrended, and then I end up selling at 1050, which is a 55 cent share loss, which is not what I'm particularly proud of. But I was trying to cut my loss. I was trying to cut it in the 1080s, and it was just going way too fast for me to really set my order properly. And because it was moving too fast, and I wasn't moving fast enough, I wasn't reacting fast enough. I'm gonna put this at 9:30 actually. Because I wasn't reacting fast enough, I end up having to bear a stronger loss, which is it's not okay. And I'm not saying that it's okay and it's not okay just to make myself feel better. I just want to be able to see for myself that I understand where I'm taking these losses and why I'm taking these losses. And oftentimes it is because of reaction time. Oftentimes it is because that I want to give it a chance, particularly if it does bounce around my risk level, my target sell level. So if I know that it's coming back and it's pulling back to an area that is lower than I would normally would want, there have been times that it has consolidated there and bounced back towards a higher price. But recently, I guess because of the market, how the market has been running, it has not been able to do that. Where it will bounce from a price, it will bounce off of support and then go back and test resistance. It's not doing that for me as of late. Since it's not doing that for me as of late, I just need to pull myself back and actually sell prior to. I already did a couple of things better this week than I did last week, which was one, not to buy in the pre-market because I wanted to make sure. I got caught in a loss last week with a loss in the pre-market. I didn't do that this week. And two, not just to buy because there was a catalyst behind it, but to buy when you see the better setup, when you start to see like this back here was a good setup because it was having multi-day breakouts. Having multi-day breakouts. Even in the pre-market, it might go down, but once the market opened, it was having multi-day breakouts, and it was just breaking out every day. Every day it was just getting multi-day every day, going higher, higher. So that was really good. So now that it has hit a pinnacle, I am anticipating it to go back down. I don't really see it going to really test the 11s again. It would be nice, but I don't see it doing that. So, because of that, this is something else that I am learned, and I will take to the bank with me. So, moving along to the next stock, which I ended up buying was TEUM. Now, this is one that I bought, I think was last week. I have it written down. Let me see. I bought it early in the month, March 6th, and I ended up selling like around March 9th. But I ended up buying this on the same day, the 21st. This is why I'm saying that I'm buying way too much, and I'm like really trying to force these sells. I'm really trying to force these profit days. On TEUM, I bought it on a day that it finally came out with news. I remember, specifically writing in my notes, I am not buying this until it can break this $3 area. And look, it was straddling this $3 line for a while. And as the moving day average continues to move along with the price, I could see this possibly going back up. But I anticipated coming down before it goes up. So we shall see if it actually goes back up. But let's get back to the fact of the matter, which is where I end up buying and selling. So I bought it. This was Wednesday. I bought it the day before, and I ended up buying it at 317. I bought it right around here, and as it just kind of grind on up, it was really grinding. It was really grinding, and even in the pre-market, I was not anticipating it even shooting up to 360. See, I even had my resistance line here, and I didn't put in a sell order at 350, nor did I did at 355. But as it started to come back down, I allowed it to just come down on me. And once it started to hit this support line, I said, you know what, I'm out. And so I end up selling it at 340 or 337. And because I sold it there, I'm glad that I just prevented myself from, this would have been torturous for me. Like this would have been a headache because this is because I didn't take my immediate gain. So once again, it's reaction time. My reaction time has not been as strong as it could have been, like it was, before. Like my reaction time is just not as fast on the selling. Like I know when to buy. Clearly, I knew when to buy right here, but when to sell. Right when that pre-market, right when pre-market was gone and the market just opened, I could have sold right into the open and would have got a higher percentage. But I end up only taking 20 cents a share, which is borderline a scratch for me. And it had the catalyst, it had the first green day, it had everything that it needed, but I did not capitalize, and that's where I need to work on my reaction time. So there might be a couple of times this week where I'll actually start using paper trading so I can work on my reaction time and get better at selling, because I'm starting to see these patterns and I'm starting to know when they're going to move. But also at the same time, there's going to be times where I don't, and times that I don't is on this next trade, which was bad altogether because I was in anticipation of Dropbox and Spotify, and I said, you know what, I want to be ahead of the crowd. I want to get in on a stock that is supporting these two tech companies, and like I said, tech is just not moving the way that it was moving before. It has been dropping and dropping bad. So I end up buying this company. Was more of a bank. They have some investments, early investment in Dropbox and Spotify. And if we look, I end up buying this same day, the 21st, and first green day. The first green day. What do you anticipate? What do you think is going to happen? Things like that. You're like, oh, it's going to go well. It's going to do well. And, I held it one day too long because I wanted to sell on the 22nd. And I said, you know what? I can wait one more day. But this candle is just wasn't strong enough. If I look back in the history, this happened. This candle represents this candle. These candles are virtually the same. These candles have definitely showing the same interest. And then look what happened on this red candle. Then very next day it had a red candle. So I was not meticulous enough to see that, hey, because it's forming this type of candle, that it could give this off. But I would not have known that they were going to come out with an offer. I did not know they were going to come out with notes to. They were going to come out with notes that would sell off the stock, and it definitely sold off the stock. And I didn't get to sell this until it was at $8.27. So this is a much bigger loss than I wanted to experience. I did not want to see 73, 80, probably almost a share, almost a share. This was like a 90 cent loss, relatively. So I did not want to see that, and I had to endure this nonsense. I had to endure this nonsense. One, because it was in my Wells Fargo account, and this rarely trades during the pre-market hours, but this time it really started to trade during the pre-market hours. And all the other times it's not even trading during pre-market, not trading during pre-market. See, even here on that Thursday when it went higher to 927, I thought it was going to have more chance, and it came down. And even when it came down, it bounced back, and I said, you know what? I should have sold. I should have sold the minute it came to the low nines. Like, once it was consolidating, well, it consolidated up here in the 920s before pulling back. But once this started to happen, I should have sold. I could have sold and just kept my, you know, just kept a small loss. But I ended up having to incur a bigger loss because, hey, I tried to get in early, but I did not meticulously look at the chart as well. I was going in with hope in favor of Dropbox, and because of that, I end up losing. So, you can't put in trust and faith in these stocks. You can't marry them. Once you marry them, then you are eternally loyal to whatever BS that they might throw at you. And that's what it relatively is. It is BS. They're throwing relative BS at you before you end up even getting a chance to see a profit. And I didn't even get to see a profit out of this. I just got to see my stock just plummet. And, as I thought on the Wednesday, where, hey, I buy, I bought when it was right around here, and it consolidated right around here. I thought it was just going to grind on up, and it did. It ground on up, but it was a fake out breakout, because if we look back over here, it really didn't do much. Didn't do much, and it wasn't going to do much. So this is a loss that was deservingly needed. I needed to see something like this because I was not watching the chart as meticulously as I could have been. So, that's it with GSVC. Not to say I won't look at it in the future, particularly especially when Spotify comes out. But right now, I'm just looking at it from a distance, because from a distance there is harmony. So on Thursday, this was the 23rd, because I ended up selling. I was empty positions, empty positions at this point. I end up buying ATOS, relatively, thinking that I was going to be able to, almost, I guess, get back at the market for some strange reason. It was the first green day on the 22nd. First green day, and I said, you know what, this might do something. This, we could see, it looked like it wanted to retest the 60 cent area again. Now that I look at the year chart is saying that that it can continue going back down. But when this day was forming, this Thursday was forming, it looked like there was going to be less selling to occur. But now it looks like some more selling might happen, particularly on Monday, tomorrow. This is a biotech company, so I can see it going down further, because biotechs haven't been doing well either. If we can look at the index for that one. Let's look at the index for biotechs. Where are you? Biotech. I see healthcare, biotech index. There we go. All right, so we see how bad biotech has been doing, but it's doing the cyclical wave, because I guess it does tend to come up and then come back down quite easily. It will hit a point where it's up and then hit a point where it's down. So right now it's bouncing off a known resistance, and a known support, and we'll see if it'll bounce off that support and continue to trend higher. Like open up tomorrow in the green, or if it will continue to come down lower based on whatever happening on the east in the east day trading markets. So, maybe it will come down lower to the 3200s, but either or, either or, I bought it. This is a bad chart altogether. Like, this is not, and I know I tried to trade this off my phone, but this is still just a bad chart. It's just a loser. It is a loser. And I don't know. You see how flat it is? This line is just flat. Look, since it opened. All right. Well, how long you been open? You've been open since 2013, right? And you really don't trade 2012, I mean. Sorry. 2012 been trading. And look, you probably had some reverse splits because I doubt that it was actually at $186. And then it's just been just trending lower. This is something that I really shouldn't even be looking at. Like, I don't even know why I even wasted my time. But I put time, effort, and money, most importantly, into this trade. So the only thing that I was able to get from this is that, hey, don't trade don't trade this type of chart. This chart is just our carcass. It's dead. It's dead to the world. So I ended up buying this at 57 cents, and I sold at 54 cents because it wasn't going to do anything, and that it didn't do. It did pure jack for me. So that was ATOS, but I did have a winner as well. Even though I lost at 1, 2, 3, I think 4 stocks, I did have 2 winners with TEUM and NFEC. NFEC did pretty well. Oop, I didn't have to do that. All right, because I was over here. We can just restore the cells. There we go. Yeah, I'm still getting used to learning how to use the whole platform. But I saw this on Friday. This was Friday. Yeah, this was Friday. I saw it was a bounce play. I saw that it was doing exactly what a stock I would hope would do in my favor. When I saw it starting to move, and I saw that it was moving up this way towards the twos, I waited for it to pull back because I already saw that it was overbought. So when it's overbought, there's no reason to chase. Just wait for some of the sell-off to happen, and then when there's some sell-off that happens, knowing that this is in play. This is in play. It's a low float. It's in the energy sector. Energy has been doing relatively okay, not the best. So we can look at the index for it. I'm starting to look at indices to see how certain stocks, if they're going to match, if they really do match, either the Dow or the S&P or Nasdaq. But I'm looking for oil or energy, I should say. Where's energy? Semiconductors. So I think I need to brush up on the indices when it comes to energy. But this is clean edge. This total return. So on Friday it was bouncing lower, but overall it has been trying to bounce back. I'm starting to see how energy in itself is starting to come back a little bit. You see how it bounced here, is making higher lows. So that's a good sign. That's a good sign when it comes to dealing with energy in itself. But dealing with this stock, the only reason why I even knew to, where'd it go? There you are. The only reason why I even knew to buy, and it was mainly because of the way that that it was trading. The way that it was trading. Let me wait. The way that it was trading once it crossed that 193 area, it was easier for it to go a little bit higher, and that it did. It got up to the 220s. Normally, the prices that you will normally see a stock will go is either it will stop in the 20 cent range, it will stop at the 50 cent range, it will stop at the 65, 70 cent range, or it will stop at the 80, 90 range. Normally, not even 90, it will really stop at 80, 85. Um, and those are like usually the areas, but the psychological levels that most traders are looking for are the whole dollar or 50 cent range. So if it's at $2, then the next major resistance will more than likely be $2.50, and then after that it'll be $3. So these are the psychological areas that most people look at. But when I was seeing this chart, it it came back down, and when it came down, it was showing support. And I remember seeing this at $1.68, and I said, is this something that I should buy? And then when I started seeing him making some moves up, I said, yeah, I'm gonna buy. So I put in my order, and this is when I was realizing that I need to react quicker, because seeing it move and knowing that it had potential because it previously had some movement, gave me an indication that, hey, when do you want to get in and when do you want to get out? And I definitely wanted to get in at the $1.75 ish area, because at that point I would have known that, hey, it's holding, and that it did. It held and just kept on grinding. It just ground its way on up to the 220 area. I didn't sell into 208, but I wanted to sell a little bit earlier. When I saw it at the 220 and 215 area, I said, you should sell. And I was thinking, oh, maybe it might retest the day high. It already created a day high. It's a Friday. It's a low float. And it traded definitely much more than its float. So, hey, maybe it could. And it definitely didn't. It came right back down. So I was glad that I sold at the 208 area. That way I'm able to, reap my rewards. So that's what I traded during the week. Oops, excuse me. That's not what I wanted. That's what I traded during the week. But I also kept in mind one particular stock as my stock to hold, and I want to make sure I do hold this for as a long-term trade. I know it just came out. I do like IPOs. I do like how IPOs trade. I did buy this a little bit too soon because I'm a little bit too anxious of a trader, so I just need to get my patience down. But I could have waited and bought this in the 27 area. Even could have waited and bought this at the actual price that it was offering when it first got into the market at 28.80. I definitely could have did it there, but I didn't. I ended up buying a 30. Where are you? Where did I put you at? Where did I put you? There you are. I bought you at $30.80. So right now I'm down, but I anticipate holding this for a long term because I do, mark my words, I do see this value higher than Spotify when Spotify does drop. So I'm seeing that this will go a little bit up. Well, not even a little bit, a lot higher. I do see it retesting $31 on Monday. I do see it, especially, I know how technology is running right now, but I do see it testing Friday's high. I do see it trying to come back down after that. But once it does retest Monday or Friday's high, on Monday, I will more than likely sell it so I can get a better position right back in. So that's what I would like to do with this stock. Get it, get a return on it. Close out my position, open up a new position in a better spot and with the better patience, and watch this price go up. I do see it going up at least to the 30s before it comes back down sometime next week. So that's what I did for the week. Look on Twitter if I do put up some nice trades. I know as of late there has been some good trades coming up that are available, even though in a down market. So do keep those in mind. I will not be trading you. I don't know why you're even on my list. I could have swore I actually added new stocks onto my list. So I will have to go through this one more time to make sure that my watch list is okay. But as of now, um, yeah, I'm ready to call it a night on reviewing my trades from last week, and I hope that this helps. This is L. Jermaine Russell signing off, and have a great trading week.